Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been helping people take delivery of precious metals and find storage options for decades. They've also helped thousands of investors with their precious metals IRAs. Call ICA today for your free portfolio review at 800-525-9556 or download your free report online by clicking the link in the video description to learn how you can double your gold and silver ounces, even within an IRA.
Well, welcome back to Golden Rule Radio this week. We have a very colorful market this last 5-6 trading days, and we'll try to add some color to what is maybe, a boring chart, kind of like adding color like green and red candles on the silver chart to what could be a boring chart nonetheless. But yeah, it's been exciting to watch the attention that silver has gained all over the world.
You use green and red?
I use green and red.
Yeah, so do I.
Yeah.
I'm just kidding. I think everyone does. Yeah, very volatile market this week for, in some cases, very good reason.
In some cases it is, but I was joking last week when I said on the show, if we could just get the Reddit influence on the silver market, and lo and behold, that night I see this email that's exactly what started to happen. So by the time the show aired Thursday, some of that pressure was already in the market, and then it was just in full swing Friday through the weekend, and then obviously through Monday. So, Miles, I know you tend to like to start with gold, but I think that the majority of the listeners just can't wait to hear what you have to say about the silver chart this week.
You don't want to make them wait? We don't have to. We can certainly dive right into silver. I've also been meaning to tell you, someone from JP Morgan called for you, something about our show, what you said last week. I don't know. Anyway, I think our assistant took the message. So yeah, why not look at silver first? Because gold really hasn't changed much. So we will take a look at the gold chart here in a second, but I think you are right. Silver is the thing everybody wants to talk about, both from a physical and a paper standpoint. And I think we also want to discuss the disconnect between physical and paper.
Wait, there's a difference?
There can be a difference. For those of you that have been listening for a while, last time I checked, we had this exact same discussion round about March and April of last year, and we're seeing something similar happen again this week, so we'll certainly get into that. But starting with the charts on silver, holy smokes, $25 to almost $30 in a very short period of time. It's almost like something happened.
That is a 15% volatile swing in just a matter of a couple of trading days. I mean, really, just in one day on Monday, we saw a low of 26.05 coming into Tuesday, but a high of 30.43 on Monday, which was actually an 8-year high in the silver price. So what happened there, Miles?
Yeah, the downside, of course, was the downside that followed as silver dropped pretty immediately from 30 all the way back to where we're at now, about the mid-26 range. So outside of the additional spike up, which is really the move from about 28.50 to about 30. The news last week, despite the speed at which it happened, it really did stay in trading ranges, and unfortunately it was unable to beat the previous high from back in August. So as much as I would like to say that the revolution has occurred and JP Morgan is about to face the next hedge fund crisis in the short position that they hold in silver, unfortunately, from a trading perspective, we have, for the most part, stayed within our trading ranges, and silver continues to step up. So I think this is why we always get back to the basics on metals investing. Look at the long-term trends. News events speed up or slow down those long-term trends. And in this case, a news event aggressively sped up us moving back up to the top end of that trading range. And every time we touch it, especially getting as high as the previous August highs, every time you bump up against it, you're just knocking a few more bricks out of the wall, and eventually we're going to have the breakthrough. So I think that definitely has sped up the time frame it's going to take for silver to ultimately get above 30 and start pushing towards the previous all-time highs.
Yeah, it's actually good to see silver push through 30. It did poke right above it. You could say that there has been a tiny little hole poked into the dam of $30 silver because the previous high stopped within a few pennies of 30. So the intraday high on Sunday night, Monday, pushed above 30. I like that.
Well, with that volatility, we also saw a huge swing in the gold to silver ratio. So we as an advisory firm care probably more about the ratio than we do the spot price, depending upon how we strategically set up your portfolio. But all that to be said, I mean, we were sitting at 72 when we recorded this show last week, and by the end of Monday, we were sitting down closer to 62 to 1 on that gold to silver ratio. And that was the beautiful thing. Like Miles started the show saying gold didn't really move much. With silver's swing, that's what pushed the ratio down and actually opened the door for us to do some ratio trades and compound ounces. And so that was a really fun day, seeing that type of opportunity on a Monday, even though the price didn't last. We still had some big wins. So with all that volatility, Monday was a really great day for our clients. I mean, we didn't see the price end up staying up, but it wasn't that. We had some really big wins in a lot of portfolios based just on the ratio and compounding ounces.
Yeah, a lot of our clients who bought in that March to May timeframe in 2020, when gold silver ratio was above 100, are multiplying the ounces. Some clients bought silver with new money. Some clients swapped from gold to silver at that high ratio. And here we are, we're adding ounces and increasing ounces. That's how we, I think, as advisors, show our clients value in working with us. That's how we separate ourselves from the rest of the industry, because you can go buy metals at a variety of places, maybe not now since there are shortages, but you can buy metals and hold on to them and do it yourself. But we do add value to our clients and they appreciate that. So if you're not a client and want to talk to us about the ratio trading, give us a call.
So with the gold holding pretty stable, Miles, let's take a look at the chart and reiterate some of those support levels.
Yeah, so gold going back to the beginning of the year, January 5th, January 6th, we did attempt to put in that higher high. I've been talking about this for the last couple weeks, and it did stagnate and failed just below the November 9th high. So gold, despite looking at the silver chart we just did, as silver is clearly in a step-up pattern towards the old highs, gold has continued to step down. Now we're right in between the November 30th floor, which is still potentially the short-term floor in gold from last year. We've taken that step up, but we did fall short. So we covered a fair bit of this last week. So right now we're hovering right about the 50% line, which is in the mid-1800s, and we're in a very tight trading range between about 1800 and 1860, 1870, and we're back at the bottom end of that. So I would like to see gold turn around at a higher price here than the intraday low back on January 15th, January 17th, that weekend. I would like to see gold put in a higher low here and begin to stair step up like we're seeing silver do. But in the meantime, I always like confirmation. I like trends. So I'm still looking for gold to put in a higher high up in the mid to high 1900s, maybe even 2000, to convince me that gold has started stair-stepping, started that next leg up. Now, what happened in silver this week could kick that off, because silver just took out a lot of short contracts, up there at around $30. So the next time silver gets up to that price, there's going to be a lot less people blocking the exit, and it's very likely you'll see silver push right through. And while we've been saying for the last number of years gold is leading the charge, as Tori just alluded to talking about the ratios, I think it's time for that to flip. I think it's silver's turn.
And I think it has, I would say. Maybe not convincingly so yet, but it's definitely showing signs of it, obviously, with the moves in the last few days. And that ratio, gold-silver ratio, pushing to a multi-year low. We haven't been this low in the ratio for a good 5 years. And so this is a good indication that silver wants to continue to outperform as the metals market all heads higher on the next leg. Silver, we expect to outperform as it has been.
I love your point, Miles, on some of those shorts being wiped out of the market and silver staying up here. And let's dissect that later when we talk a little bit about paper versus physical. What about platinum and palladium? Because I think that they get forgotten in swings like this, and we don't want to forget those two.
Yeah, palladium is something we definitely haven't talked about in a while, because palladium has been in this long-term trading range since July of last year, going from about 2,200 up to 2,700 back and forth for a while, very tight, until this week, where palladium, for the first time, actually broke below both its long-term and its short-term trading ranges you can see on the chart here. Now, it's making a little bit of a jump up, but like I always look at, old highs become new lows, old lows become new highs. So I would actually like to see palladium, which has been using this price as a floor, I would like to see it come up and now have it be a ceiling. Now, the reason I actually want palladium to go down or at least continue to trade sideways is, once again, getting back to the concept of the ratio, because we are looking at the platinum to palladium ratio. So if we start to see, because of the cost difference between the two metals, palladium hold or even begin to come down, while platinum, like silver, is clearly on the rise, we're going to have an excellent ratio trade opportunity coming between platinum and palladium, as well as the one we've been discussing with silver and gold.
You know, a metal we never talk about on this show, too, is rhodium. I had a client yesterday, Dr. B, was telling me he was able to pick up an ounce of rhodium for $2,000, and yesterday was able to swap out of that 1 ounce of rhodium for 9 ounces of gold. So rhodium's taken off, is sitting at over $20,000 an ounce right now. And that's a big ratio trade. Imagine ending up with 9 ounces of gold for just $2,000. You know, you'd have to go back to the 70s to find that type of deal, it seems like. So those are the powers of ratios, and it's coming with platinum and palladium. Everybody stay the course.
So in the long run, that's certainly what we're looking for. I would like to add, at least with platinum, there's a short-term argument. You could actually also see platinum have a sell-off and a breather here for a number of weeks. And I think that would coincide with what we're going to look at in the Dow here in a second, too. So do remember, platinum, it's not the same type of monetary metal that people think of when they think of gold and silver. There is a lot of almost exclusively industrial and jewelry demand for platinum. So remember, you are going to see trading in that particular commodity a little more akin to other commodities, as opposed to other metals like gold or silver, which are alternative currencies. So looking at the chart, and I brought this up last week, you can see here, there does seem to be some argument you could see a sell-off in platinum, and I think that would coincide with potentially the palladium chart looking like it may actually be turning down.
I'll touch on the dollar because we said the dollar index was going to rise here. It's not having some huge rally, but it has kind of melted a little higher, and today is pushing right up into what we were talking about in that long-term declining trend line that we've talked about for a few years. It's touching that now, as we'd said that it would do a few weeks ago. So dollar gaining a little strength. Again, dollar strength doesn't necessarily mean metals weakness. I think that both could be seen as a safe haven and have rallies in both, but ultimately the dollar is going to peter out this little rally at some point and then head lower.
Yeah, Robert, with that rally back up in the dollar off of some of those trading levels, we are seeing the Dow show some weakness, like a number of other things like silver, like platinum, like palladium. You're seeing this channel trading taking place, and here over the last week, you're starting to see some of these channels getting breached. Silver on the upside, palladium on the downside, as well as the Dow on the downside. So what I'm looking at here is the Dow chart going all the way back to November, when we started to put in new all-time highs and we started to trade sideways. We actually had our first breach to the downside on the low end of that trading channel here back on January 29th, last Friday. Now we've, of course, gapped back up, and we're back up into that trading channel. But it does look like weakness. So in one of the numbers I threw out last week on last week's show was the big gap up going back to the beginning of November that's yet to get filled. And that coincides back down at around the 50% correction line. So I think it's very likely we could see the Dow push back down sub 29, maybe 28.8, 28.5, somewhere in that range, to close some of those previous gaps and a little bit of sell-off in the Dow. So with the dollar rally, not surprising to also see a little bit of sell-off in the equities market if people are maybe putting a little bit of money from the equities over into treasuries.
All right, so we said that we'd get a little bit into the conversation of paper versus physical, because what's driven the majority of the price action in silver in the last 5 trading days has been the paper market. And the reason being is there's 250 times the number of ounces reflected in paper than actually exist in the physical silver market in terms of what you could go out and acquire. Now, one of the things that the Wall Street Bets group on Reddit was accurate in doing is pushing SLV, for example. SLV is an ETF. The reason that they were doing that is because it's backed by silver. So what they were trying to do is say, look, if you're going to drive the price up and you're going to be scaring shorts out of the market, and what a short is it's a bet on a price drop. It's somebody that's saying, look, I think the price is going to come down and I'm going to profit if it does.
You've already sold something you don't own yet.
There you go. And that's what their complaint was on GameStop and AMC and some of these other stocks, is that, again, there were more shorts that existed than shares that existed. Okay, so much like leverage in the paper market. Well, what ends up happening is you've either got to cover those shorts or you've got to cover your ounces. So if the price is continuing to climb in an ETF that's backed by physical product, they've got to go get the product. And so what starts to happen is you get an actual physical market pinch. And that's why the questions coming to our firm were, do you have anything? Do you have any availability? And we did run into availability issues last fall with the COVID thing, even in gold. You know, the COMEX was sucking up all the gold, and everything being refined was being sent to the COMEX just to try to cover the huge influx of dollars into the ETF market. So they were right, and they were driving the price up. Unfortunately, there's other paper markets. So you have the futures market. And the futures market, again, does not represent anything that's been fabricated, right? It doesn't represent a coin or a bar. And you can play in the futures market by borrowing. You can play on leverage. So you can buy a contract in the futures market for 5,000 ounces of silver and only have to come up with like roughly 9% of the money in order to buy 5,000 ounces worth of silver. Well, what ended up happening is what would be predicted. What they didn't expect is to come against the CME group or the CFTC that can raise margin requirements, meaning if you're going to bet on a particular product in the futures market, they can raise the amount of money that you have to step up with. So what did they do? They raised it 18%. And we've seen these games. You know, Miles has a funny story that we can tell some other time back in 2013 when they raised margin requirements 5 times and drove the prices down very, very aggressively. So that's where the quote-unquote manipulation of the price can come from indirectly. We just want the listeners to understand, did it create a supply issue? Yeah, I mean, Robert and Miles, did you guys start to see a little bit of delay maybe on delivery? We didn't run out of any product, right? But it was something that had it kept going and had been successful, you do start to see an inability to cover particular ounces.
Sure. Well, industry-wise, there's certainly been a bit of delay. Within our company, of course not, because we don't sell things we don't own or don't have access to. So I guess it depends on which dealer you're speaking to. But I have talked to a number of people here recently, client-wise, who are doing a little bit of shopping around, and they're finding pretty substantial premiums. If any of you out there listening has gone shopping for silver American Eagles recently, you're seeing pretty substantial premiums over and above the spot price. And there's a lot of companies out there that are 4 to 6 week delay, which means they don't have it and they don't have any guarantee they're going to get it. So the exact same discussion you were just having about being able to cover margin positions on short contracts could end up being a concern for certain dealers in the precious metals industry. So we'd heavily encourage working with and only buying from dealers like ourselves who deal in product they own or have immediate delivery availability on.
Yeah, that's really the key. If you're going to speculate on just the price, right, and you know that it's a short-term speculation, that's not what the physical market is for. We're that long-term asset preservation, ratio trading, multi-year hold. If you're going to speculate in the short term, that's what the paper market's advantage really has over the physical market, is you have much more narrow margins, and you can also do it on leverage. There's leveraged ETFs out there that can be a 2 or 3 times reward or painful penalty on the instance that it goes down. But on to the upside, you know, you can actually get a 2 to 3 time return just on that silver spot price move. That's really representative. The ETF market and the futures market is what we mean mostly by the paper markets. And again, keep in mind, they can move price without having to have any physical ounces holding them accountable in many instances.
Yeah, Tori, I think that's an important thing to bring up. And, it harkens back to what we were talking about earlier when we were looking at the silver chart. Yes, things happen. Yes, they happen short term. Don't get emotional or reactionary to markets. You build a plan and then you wait for these things to happen, not because you're reacting to them, but because you're looking for opportunities. This is why on a gold show with a gold company who is adamantly long-term bullish on the price of gold, the thing we focus on is pullbacks. Not because we think the price is going down long-term, but because we're looking for opportunities to increase and grow positions at lower prices, as well as at better ratio opportunities. So don't lose sight of the big picture. Don't lose the forest because of the trees, as we see the volatility in the metals market going forward.
Well, thanks, Miles. And to your long-term big picture, those are some of the macroeconomic and monetary policy decisions that are driving that. You had over $4 trillion in COVID stimulus last year. We're now getting ready to pass another just under $2 trillion on top of a whole bunch of long-term debt obligations that they're discussing in Washington. That's the big picture. With gold and with silver being discounted gold, that's what steers you into a balanced position that way. And don't take your eye off it. Yeah, you're getting a lot of COVID vaccine news rolling out and maybe some things that put some short-term downward pressure on the metals from a sunny outlook standpoint. But with continued divisiveness, continued spending, that's the macro underlying fundamental to keep your eye on. And with that, we won't drown you too much with the minutia of what has occurred in the last week.
So that's going to do it this week for Golden Rule Radio. As always, we appreciate you swinging by. If you liked what you heard, hit the subscribe button, ring the bell. Head on over to our website. If you have any additional questions, you can find us at McIlvaney.com. We're also on Twitter at ICA Gold or Facebook at McIlvaney Financial. And as Robert mentioned earlier, it's not a bad idea to sit down with a professional precious metals advisor like the ones here at McIlvaney ICA. So if you'd like to speak with one of us, give us a call at 1-800-525-9556.
Thanks for listening. Have a great week.